What is a line of credit and how does it work? If you've got a question you'd like me to answer, real estate, personal finance, real estate investing, type it in the comments below. And if you're selected as our question of the day, I'll be happy to answer that for you. So thanks for joining us. So there's a couple of different lines of credit. There's a secured line of credit and an unsecured line of credit. Technically, a credit card is also a line of credit. It's an unsecured line of credit where somebody's saying, Visa, MasterCard, saying, hey, we'll give you this credit card. Now, Visa, MasterCard is typically the network, and what's happening is that money's coming from a bank that's securing that or vouching for you. So as we talk about lines of credit, there's different ones. They can be very helpful in real estate investing. As a matter of fact, we recommend to a lot of people to get credit card finance, where they get some credit cards where they can get a line of credit and they can pull money off that for needs. They might need it for materials. They might need it for a down payment where you can actually use that money and do a cash advance and take those funds and actually use them for money and wire that out. So that can be really helpful as a real estate investor. You just have to be careful making sure that you're getting an introductory rate at 0% interest or it's a low enough rate. But even then, even if you have to pay an interest rate on it, you're using it for such a short period of time. As long as you're responsible with it and don't go to Disneyland with it, it can be very helpful as you are growing your real estate business. And frankly, even if you're experienced and been doing it for a long time, it's very helpful to have access to that additional capital. So that's one way. In some cases, if you have an established business and revenues and you've had it for a long time, you can get an unsecured line of credit where they just say, hey, here's $50,000 and you can borrow that money and pay it back and borrow and pay it back. And one of the things that's different on a line of credit than you have with a traditional loan is that flexibility. Meaning with a traditional loan, you get a loan for $100,000, it's against a property, the $100,000 goes to pay off the other seller, and then you make monthly payments on it. Whereas with a line of credit, what's happening is you can draw some money out and then you can pay it back, and then you can draw some money out again and you can pay it back, and you don't have to draw all of it. And you could draw some money now, and then next week you could draw a little more money, and then you could pay some money back, and then you could draw a little more. So you've got this flexibility that you don't have with a traditional loan. With a traditional loan, once you pay it off, it's paid off. And then if you want to get another loan, then you've got to go back to the drawing board and get a new loan. And so that's the flexibility with these lines of credit, with credit cards and unsecured lines. Then you get into what are called secured lines of credit. And a secured line of credit is typically going to be against a piece of real estate. If you own your own house, you might be able to get a line of credit, a second loan against your property, which can be really helpful for real estate investing. Or if you have a property that's paid off, you might be able to get a line of credit against one of those paid off properties, which would give you the ability to do things. I personally like that for doing lending. So you get a line of credit against a paid off property or a second against your house. You can then take that money and use that to lend out, and then you pay the loan off. You make a spread. It's the difference between what you have to pay the bank on that line of credit and what you charge is called the spread, and you can make some money that way. Now, there is some risk if you may have to foreclose on the property or do anything else, but that's kind of a next level real estate investing technique using lines of credit. So there's different types of lines of credit. The pros on using a lines of credit is it gives you more leverage. The cons of lines of credit could be the expense, but I actually don't think that's that big of a deal because it's such a short period of time. And if you're smart, you can typically get some lines of credit with an introductory rate of 0%, and then you can roll that over to a new card in 12 months or something, because there's a lot of competition when it comes to getting credit card finance. So if you've enjoyed this video, please hit that thumbs up button. It means a lot to me to know that you're enjoying these, and I really appreciate it. So hit that thumbs up button. And if you've got a question of the day you'd like me to answer, type it in the comments below, and I'll get that answered for you. Couple of videos I think you'd be really interested in is how to get loans for investment properties. I walk all through that. And then another video which is 17 ways to get 100% finance. Recommend that you check out that video as well. Now, if you need some help in any aspect of real estate investing, maybe you need help finding properties, or you need hard money to close a deal, you need help with some scripts or some forms, some tools or resources, maybe finding properties, check us out over at dohardmoney.com. And we'd love to talk to you and see if we might be a good fit for each other. Otherwise, make it a very profitable day. and bye for now.